Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And we are looking at how investors and traders should be navigating the US-China trade war, with China retaliating with their own tariffs against the US. And also, Morgan Stanley is calling for investors to take profit from Asian technology stocks. To help us unpack what investors should be watching out for, we've got Kian Soon. He is the CEO for Astral Asset Management. Kian Soon, good morning. How are you doing?
Good morning. I'm doing great.
Glad to have you on because we've got a lot to talk about when it comes to the US-China trade war. Let's start there first with the latest move from China. So quite a bit of a retaliation with 15% imposed by Beijing on U.S. energy imports and also 10% on American oil and agricultural equipment. Plus, it is also investigating Google for alleged antitrust violations. What do you take away from the latest tit-for-tat coming through?
Since Trump's inauguration, I think the media focus and coverage was exclusively on the planned tariff measures on countries like Canada, Mexico, and China. As with his usual rhetoric we have seen in Trump 1.0, we reckon his approach of getting countries to be on the negotiation table starts with the shock and awe announcements. And in the end, he hopes that the countries will cave in and negotiate for a much better deal. And more often than not, we saw that the buck is worse than his bite. And if you look at the response from China this time, I think it's actually much more measured, and it's not, meant to agitate or irritate him as much. And China is treading this response very carefully. And if you look at China's position compared to 5 years ago, when it was significantly hit during the 2018 US-China trade tensions, today, right, China's US imports coming from China has dropped from 21% to 14%. At the same time, whereas exports to the US account for 3.5% of China's GDP in 2018, as we have seen last year, this has dropped to 2.9%. So it's a significant decline in a relatively short period of time.
Yeah, there are some changes already in the past few years with how China's economy has evolved. Now, looking at the first term with Donald Trump versus now Trump 2.0, do you expect China's approach towards its currency to be any different? Because I remember back then they were willing to let their currency weaken to some point.
Yes, the weakening of the Chinese renminbi is often cited as a countermeasure for trade tariffs. And it really depends on, what kind of extent the trade tariffs Trump is going to impose on China this round. But it's unlikely to launch this measure outright, as weakening of the renminbi as a monetary measure could often lead to other unwanted economic implications. So unless all other countermeasures fail and negotiations not doing well, etc., China is unlikely to proceed with the weakening of the renminbi at the present moment.
All right, quick look at the US dollar versus the Chinese yuan cross. It's now at 7.28, and in the past year, we are seeing the US dollar gain some 1+% against the Chinese currency. Now, taking a look at what some analysts are saying, Morgan Stanley says investors should take profit from Asian technology stocks amid all these trade-related risks, elevated valuations, and lack of earnings upside. And they say the sector has around 20% near-term downside should tariffs increase, especially on computer chips and with trade tensions. What do you make of this approach, taking profit right now around Asian technology?
It's very important that investors be very clear about their investment and trading horizon. More often than not, if you are having a very short-term trading investment horizon, you'll be very concerned about geopolitical tensions and what the macroeconomic news coming out from all the media. So hence, you are trading on the signals, and you'll be very concerned. But if you ask me, I think a lot of the Asian tech stocks are still trading at huge discount, and this is relative to the Magnificent Seven in the United States. If the recent launch of DeepSeek is a kind of I expect more positive developments in the Chinese AI sectors, especially coming out from the tech giants, which will be highly competitive and making inroads on this space. One need not to be first off the block in a race. One simply has to be cheaper, better and faster in the longer run. We have witnessed how the Chinese has competed aggressively in the solar panel and electric vehicle sectors. And I guarantee you that the competition in AI and the launch of DeepSeek is just the start. So there'll be more innovations in this space and announcements coming out in the coming year.
Yeah, that's a good point. You have seen quite a few industry leaders now coming through from the likes of EV players and now AI. So what's more to come? Watch that space. Now, talking about watching your space, in the investment portfolio, we have a lot of options, and we are also going to be tracking what's playing out in China when markets reopen after the Lunar New Year break. So investors might get a chance for some bargains if there are some strong reactions to the latest trade war developments. What is your approach right now with the portfolio allocation? What are you more leaning towards right now?
In terms of the portfolio allocations, especially in particular to Asia, the investment horizon must be clearly defined. If one is worried about short-term volatility and trade in and out, it will be a very challenging period, in particular, for investors with exposure to China. Right, if one takes a longer-term investment approach of 3 to 5 years, then buying into China and Hong Kong stocks at this juncture actually offers very attractive value given the low valuations. One tactical approach some investors have adopted would be just to reduce exposure to companies with international trade exposure and focus on companies with more exposure to the domestic front. This approach will actually reduce the kind of volatility you'll experience on a day-to-day basis.
Okay, Kian Soon, for your own funds, Astral Asset Management, how are you approaching the stock market right now? Are you looking for a chance to get in at better prices, or are you starting to load up already?
For Astral Value Fund, because we are fundamental-based and a long-term investment fund, we basically have invested in China and Hong Kong for the past few years, given its very attractive valuations. And we will continue to pick up, stocks and beef out our portfolios in terms of looking for attractive value companies who have very strong cash flow as well as profitability.
All right, lots to watch out for in the coming days. We've been in conversation with Kian Soon. He is the CEO of Astral Asset Management. Kian Soon, thanks for your time as always, and have a great day ahead.
Many thanks, and happy Chinese New Year.
All right, catch up with you again soon, Kian Soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.